people are willing to spend, $2,750, $3,200, $3,500 in rent. In rent. They have no idea what their landlord's interest rate is because they don't need to know. They're just making the payment, and they're okay doing that.
Hey everybody, Steve Hamoen here. So excited. We've got Janine Veenendaal here on the podcast. She is an absolute rock star in the mortgage space in Canada. She's a mortgage broker with Real Approved Mortgages in Sarnia, Ontario. She covers all of Ontario. She's a beast, and just want to talk a little bit about your beast in the most positive way of crushing business. And I want to just kind of chat a little bit about, what it's been like. The market's certainly been an up and down, absolute roller coaster, between the stuff that had happened with all the lockdowns and the spike in the market and then the shift that happened recently. So you tell me just a little bit about yourself, introduce yourself to the listeners.
Well, hello, Steve. Thank you for having me. I am a mortgage broker. Was previously a mortgage agent for a couple years. Before that, I had some accounting experience, serving experience, love money, and love to be social. So here I am, mortgage broker.
It's a really good pivot then, that's for sure.
Really good pivot, right? How do you blend those two careers, right? It's the best blend, and it works. So
exactly. Well, if you love money, have an unlimited surplus of inventory to sell. And that's the greatest thing about the mortgage space.
Serving, like bartending, like you come home with that cash on hand, right? If you work hard, you give good service, you're going to make good tips. It's the same thing in the mortgage industry. The exact same thing.
That's actually really true. It's actually
right.
It's probably the same in a lot of businesses.
Yeah, and it's crazy to think that style of job when you're younger or older, whatever you're doing it, could pivot to help you in this sort of career.
Absolutely. I think anybody who is looking for somebody who's going to be a great employee, check out the service space. Because 100%. there's so many people, they work long hours, they deal with clients in very, sometimes difficult situations.
Yep.
And they're great at just having a good time with people. And I think what a wonderful spot to recruit people out of is the service industry.
Honestly, I'm going to say a good chunk of my friends are very successful in sales, and they started waiting tables, or bartending, or you're dealing with all kinds of people every day.
Absolutely.
Nice,
absolutely.
Mean, cheap, rich, whatever they might be. And the mortgage world's the same.
Yeah.
Right?
I remember I had one table once when I was waiting. They had they ordered their soup and they ate the whole soup, and at the end of it they said, "Well, I don't want to pay for it," and because it was cold. I'm like, "Okay, great, you ate the soup. That's fine. We'll work on this." And then the salad came out, and then they said, "Well, there was bugs in the salad, but they ate the whole salad." I'm like, either you really like bugs, or something's not making sense anymore.
But let's just pivot that to a home transaction. How many times has someone gone infirm and then instantly has some sort of remorse or wants to get out of it? And it's like, you already went in. You're in. You ate it. The food's in your belly, right? Like, you have to close on this. So
yep. That goes down to, I think, it's the good advice up front. And it's the good questions 100%. Up front. If I would have said to the person up front, "Hey, is your soup okay?" There's no backing out, right?
You would have probably said, "It's shit."
Yeah, it would have been way better at the front to say that than at the end, and then now we've got a problem. And then having to tackle them in the parking lot to come pay their bill is crazy.
Oh my goodness! You know what? But then you have the other great experiences, and it's the same with clients, right? You have people who appreciate the service and they leave a good tip or they leave a good review. Like, I find reviews are worth more sometimes. Just bringing more people in the door, and same with mortgages, right? You do a good job, the word gets passed on.
Now, you started off, what was the job before you were in the mortgage space? Like just right before you got into the mortgage space?
Well, stay-at-home mom, doing a daycare, had to run a business of some sort while I was at home. Couldn't do nothing, right? Yeah. That's just my work ethic, so ran a little daycare out of my house, had too many kids some days, and we had fun. It was a good way to make some money while I was at home.
And then what made you go,
lots of different
I'm changing diapers, I'm looking after kids. I think I want to look at pay stubs and like do mortgages. Like what was the TSN turning point on that? What made you look at that market? Because there's so many markets to look into.
I do remember a friend recommending it, and I do, you know what, it's so weird. I remember, I think it was grade 11. We did a chapter on, and a small chapter because schools do not touch on the topics of everyday finances enough. But we learned about mortgages, and we learned about, I'm trying to think what else. We were doing budgeting and just kind of like some simpler math in class. And I remember acing that section and being like, I love this math. I love it, right? I just love numbers in that way. So that's what I thought the accounting would fit for me. I started to pivot over to that chapter and thought, okay, maybe this is what I want to do. It wasn't, because my brain just needs a little bit of creativity, and the accounting just didn't give it to me. I need the social, I need the events, I need the conversations every day. So a good friend of mine was like, why don't you try mortgages? And even my mom, why don't you try doing mortgages? They pivoted me to the bank at first, but I knew I wanted to be independent. I wanted to own the business and work hard at it if I wanted to. I didn't want to be 9 to 5. So
yeah, that's awesome.
What about you, Steve? What made you get into mortgages?
Well, that is a very long story, but today's not about me, it's about you. And
right,
that's actually a really great story, because you were working with families, really looking after one of their biggest assets, which is their children. And now you're working with families looking after their other biggest asset, which is their real estate.
And honestly, the feeling of both, like, I remember some days you really felt the strain of, oh my gosh, like, these people are trusting me with their pride and joy, right? And that pressure. You don't think that daycare providers would feel that? It is a very intense pressure.
Yeah,
and
I can see that.
Same thing with the home transaction. An offer gets accepted, your mortgage agent is thinking in the back of their head, like, they're confident, but they're also thinking, like, I got to get these people this out, right? Like, we can lose sleep over it if we really wanted to, because in the end, like, it's a lot of pressure. You don't get that house if things don't work out. So it's important to have somebody good on your side.
Well, the funny thing is, and that goes down to, the whole process of real estate. And I think, when we were going through the height of the real estate market, when we went through that big bump that happened where, real estate agents would be going out, throwing out 40, 50 offers and losing all these offers and finally getting the client to buy, get that property. They're just happy that they got anything. Yeah. And now pivoting that the sellers now are in that predicament of, there's less showings per house. The idea of, multiple offers is faded for many different areas. And then the financing, that people are getting the sticker shock of, what does that look like now? Where are you seeing people win in this space? Like, what are the big wins where people are coming out going, man, I think I'm actually ahead right now by what I'm doing?
As a purchaser, you're asking?
Either. Yeah, purchase. We'll start off purchaser, sure.
Honestly, a lot of the files that are coming across right now, they're a multi-generational purchase. It's mom and dad helping out, or mom and dad living. And that was going to be one of my rants today. I wish more people open their eyes to it. And I want to get more people to open their eyes to it. The cost of long-term retirement living or long-term care living is absolutely absurd. Rent is high. So if you own a rental, great. If you're trying to rent as a retiree, OAS and CPP don't cover that.
No.
They don't cover rent. You are not making enough.
No.
So why not use the generational wealth together with your son or daughter or whoever it might be who has a salaried income, they have savings, and purchase something together. It's only going to come to the family in the end. It's all to share, right? As long as you get a good family structure. Like,
it's one of those things where, I mean, I see a lot from, European families where you have a multi-generational home. You see a lot from like Middle Eastern or Indian families that have a lot of multi-generational homes. Mm-hmm. But that normalized Canadian family, it's few and far between. I mean, my wife was fortunate when she grew up. her dad they had a farm up near Owen Sound, and they built a addition on the house for the grandparents, right? Her grandparents, her parents' dad, and mom. So what they did is they had a door between the two, so there was good, good fences make good neighbors.
Yeah.
But what it meant is that when the parents had to go out somewhere, if the grandparents agreed, they just opened that door, and now the kids can kind of, you have built-in childcare.
Built-in babysitter. I know, that's another thing, right? Like, but also too, like, I love my mom, and I don't want her to be our everyday babysitter. So, like you said, having those closed doors, having those walls, and I think that's a lot of the hesitation in the Canadian culture is people don't want their parents to be nannies. And I think that's where a lot of that comes into play. They don't know. They're kind of itching to get out of the house and move away to school. And, it doesn't really come around to that point where you're like, wow, it'd actually be probably nice to live with mom and dad until, you've had a family or you're a little bit more established and you realize the dishes aren't going to do themselves. And the magic maid doesn't come around the house and life gets a little bit harder, right?
Well, I think it goes down to having.
What boggles my mind, Steve, is like people will move into a triplex, fourplex, and not know who's on the other side of the wall, and trust that situation. So like when you think of it that way,
it definitely boggles my mind, because you think about the idea of you could pick your neighbor. Now your neighbor isn't going to be, doing dubious things, playing music till the wee hours of the morning. And if they do, it's probably because you guys are doing it together. And, and so it's great. But it all comes down to setting up good boundaries. Yeah, and I think most relationships are about having really good boundaries. It's not about what you're going to do together. It's what you're going to accept that you're where the limits are going to be.
Well, I'm sure with your kids, their ages, like, you guys live in the same house, but do you live in the same house together some days? Or is everybody scattered?
With the kids?
Yeah.
It's interesting you asked that, because, I mean, for us, we went from a very, I would say, for us, it was a larger house. Yeah. And we actually downsized, because what we found is that because we had so much space, we were seeing our kids less. Yeah. And so by creating like tighter walls, we actually see them more. Yeah. And I kind of like that. Like, I don't need to have, we used to build houses that were, 20 to 55,000 square feet being a part of those builds. And I don't think I'd ever want to live like that. That's what I'm saying, though.
Like, with the multi-generation, if you are buying one of those larger homes, you're not going to be stepping on each other's toes.
Yeah, that's right.
Right? Yep. Like, yeah, it could be such a good solution if people would just accept it.
Well, an interesting setup right now is the city of Kitchener has just passed that most residential, if not all residential, and I haven't gone into enough detail on this, but that they will allow in any of the residential zonings that you be able to build a fourplex.
Right.
Like, and so if you have parents and 3 kids, now you have houses for everybody on a single pin. Yeah. And what a great thing. Like, if you were thinking about trying to create a really great experience for a family, think about going to an amazing resort, like, say, I don't know, Mont Blanc or Mount St. Anne or any of these places, say Whistler Blackcomb. The thing is what you're going for the common elements. So if you created a living space where everybody had their own private living space, they gave them what they needed, and then you had a common element space, which had the pool, had the tennis court, had the basketball court, you could have a pretty epic place. Like, it doesn't have to be dingy. You can have a pretty epic place where you have all of these amazing things, and everybody has access to those amazing things. Yeah. As they need it, because you're not going to use the basketball court every day. No. And generally, when you're going to play basketball, you're going to want somebody to be there to play with. So, it's good to have that sense of community, and what a wonderful way to build tighter family relationships.
No, and I think, like, I hate even saying the word, but I think if COVID has taught us anything, is when I think about long-term care homes, and I don't want to say anything bad about them, but you didn't know what was happening inside those walls when we weren't allowed to see our elderly family.
Well, I mean, my wife did. She was a paramedic for 15 years, and she saw them all the time. And
well, and that's what I'm
some
saying.
of them are fantastic, or some are the opposite of fantastic.
Right. And I get it though. Like their funding is low, and they're scraping away, you know, trying to take care of these human beings. But if we have this situation where we have an accessible suite, or we can put grandma or grandpa, you know, in the house and have a caregiver come in, like now you know that they're being cared for. They're being cared for properly. And, you know, you don't have to worry.
Well, and there's so many great, like there's a really great service near us that they come out to your house. You know, they provide all the services. I mean, one of the things is when they get older, you know, they might need bathing services. They might need, you know, all these other things. And and we as children might not
you shouldn't
want
have
to
to
be
do that to your
bathing
parents.
our parents.
For a bit. Yeah, you can for a bit, but that's not, they don't want you to do it
won't
either.
For a bit. I'm just saying. I probably won't.
But they don't want you to do it either. If you ask your mom and dad, they don't want to do it, you to do it either, right?
That's right.
So exactly, bring somebody in, bring a PSW in, have somebody come to the house regularly, and you can help with the other stuff that needs to be done. And they're going to help pay your mortgage. So, right? Like, it's a win-win.
It's just huge teamwork. And I agree. I think that to me is probably one of the biggest things. I mean, one of the businesses that I'm working with is a company that specializes in, so if somebody doesn't have that opportunity with family, what they specialize is in creating cohabitation agreements. So that, you know, and I look at this, I'm like, well, how did I buy my first house? Well, the way I bought my first house is I lived in one room and I rented out every one of the other rooms.
Yeah.
And then I traveled so much that I actually ended up renting out all the rooms. And when I came home, I slept on the couch for the 2 days I was back in town.
Couch surfed for a bit,
and then,
just so you kept the property.
And it was great because I lived for free. But the thing is, I think if you go into the real estate market at any point and think, you know, my first house is going to be my last house, I think that's the thing that kills people the most when they're trying to get into the real estate market. Just get in, get something, have somebody else help pay your mortgage so that you don't have to bear the whole burden of it by renting out rooms or buying a duplex, buying a triplex, any of these things. And then you're going to get into a position of strength because that mortgage is just going to be paid down and paid down and paid down by somebody else, not by you.
I'd love to see a recent survey of, you know, the average time that someone spends in their first house right now. I think we might see it elongate a bit just given what the current market has done with the interest rates.
Yep.
But like I know us personally, we were just over 4 years and then we were ready to get out onto something else. We realized it didn't work for us and on to the next one, right? But that house helped us buy the next house. We had the down payment available from our equity.
That's
like that's the game.
Well, exactly. I mean, a house is an asset. A house is a hedge against inflation. A house is so many different things. It's just a good pure storage of wealth. Yeah. Right. And I think, you know, are we going to see something as a pivot? I totally we will. I mean, when we saw before, when interest rates were going down, it was very easy for somebody who had a house who wanted to sell it because their payout penalties would be low on their mortgage. Yeah. And the house is going up in so much value, like they don't care about the payout penalties because they're just either making stupid money on when they sell and they're paying stupid money on they buy, and it's just crazy numbers happening. Now what we're looking at is as a stabilized market, which in my opinion, I love a stabilized market because it's predictable, it's reliable. You know, if you know that the houses are just ticking away at, up at the inflation rate, that to me is a beautiful market to be buying in.
I love
that's where you can buy 10 properties and feel confident about doing it.
I think rates around 5%. It's great.
Yeah. And when you look at it and you say, okay, well, if that's the case and you're getting in that market, the only thing you have to be cautious about is if rates do start to drop, if you're in that 5 or 6% rate and the rates go down to 4%, the payout penalty will be larger at that point. Yes. So it's something to think about. And that's why I think like a mortgage broker is really important to be involved in the cycle, because I've seen when I was in real estate and not in the mortgage space, you know, I would go to start selling somebody's house and we're going through the whole process. They're all excited. And then, you know, you get that offer and then, you know, you start going through their financing and like, your payout penalty is like $40,000.
It eats away your equity like crazy.
Yeah. And then all of a sudden they're scrambling because they didn't realize that and they didn't get good financial advice. And And that's why I think the experience tells you these things. You got to make sometimes mistakes before, or have a really good mentor who helps you.
Yeah.
And
like I think our mortgage advisor at the time, we were very young. We were 19, which is crazy to think, had advised us to go into a variable because I think right up front we had said, not sure how long we're really going to be here, just kind of want to buy a house, have a place. And at that time in their head, they probably thought, okay, penalty, and how are we going to, what's the cheapest way to get you out of this in the next couple of years? And variables were a little bit more tame then as well, I think. We weren't seeing the climbs we have seen this past year, but still was a risk. I'm not saying it's not. I just think that's where their mind pivoted to when they put us in that 5-year product was they can lock it at any time, but they can also get out with 3 months of interest. So,
well, and the thing is when we look at mortgages and we say 5 years, right? Like when people are assessing the market right now, I think we're starting to look at the real estate market like stock market, where our barometer for measurement is weeks, months, not even year, maybe 2 years at max.
You nailed it.
You've got to be looking at real estate over a longer period of time.
Yep.
Like, for example, one of the things I do is I look at, okay, well, if we looked at real estate today and we looked at the interest rates of today, and interest rates, fixed rates, as we know, are driven by bond yields. And we look at the bond yields of, say, when were they at parity to where they are right now? And let's just say it's somewhere around 2007, right? Is sort of give or take where it was at these rates. Well, would you, if you had a Marty McFly flux capacitor, would you right now jump back? And if you could buy houses in 2007, would you do it?
Yeah.
I'd buy 10 of them. I'd buy 10 of them right now. And because, it was a situation where, housing would tick up at 3 to 5% at inflation rates. Yeah. So this slight adjustment that has happened, over the long term, I think it's actually beneficial because houses will get back up to the same value. They're just going to tick up to the same, and they'll exceed the value that they were. Because I mean, money is arbitrary. Money is it's a fickle thing to measure with because it doesn't have a fixed value. Most people when they look at money, they look at money in the terms of a dollar is worth a dollar. Well, it's not. If you measured housing in the terms of lemons rather than housing in the terms of dollars, you would see that it hasn't adjusted that crazy compared to, other assets or commodity classes.
I think if you're looking for like really good advice as a first-time buyer, ask homeowners that have owned for the last 10 years. Ask them what they bought their house for or their first house. Ask them what they sold that house for.
Ask what they made at that time and how much did they make at that time and how much was the cost of gas?
Yeah. And if you don't trust us professionals, you think that we're just trying to sell or, there's just a lot of stuff. Sometimes you just need to hear it, right? You need to hear it through a different pipeline to believe it. So go to those sources and they will tell you. You can probably say as a homeowner, Steve, certain timelines and scenarios of prices. We bought, it's going to be hilarious, but we bought for $232,000 and sold only for $250 in 4 years. That return, not great. But that was the timing of the market and how things were going.
Wait a second. Say that one more time. You bought for how much?
$232,000. It sold for $250,000. So it was it's kind of where we are right now. It's kind of in that,
after that wash of expenses for transaction, it's expensive.
And that would have been in 2009. Yeah. So there it is.
You actually lost money on that one when you factor in your inbound.
Did. And you know what? The realtor was up front off the get-go and was like, this isn't going to be a great return, but I know this is the location you want, blah, 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 right? Yeah. But then our next house, we bought $282 7 years ago, and it's now worth just under $1 million.
Well, and the thing is when you buy real estate, or so you sell real estate, and then you buy real estate, if you're transacting in the same market, you're not really, you're getting the transactional fees of the, that's going to impact
commission. Yeah.
That's one of the things you really have to factor in. But if it washes out that you're just going to another maybe higher performing asset class, that's the same as like buying and selling a stock or a mutual fund or whatever.
We moved from more of a college industrial area to lakeside living.
Yep.
For the same, I like it just, and now you think about And that's only 7 years. That was us having kids, and that's it. Like growing up a
Yep.
little bit, and here we are. And we know it's going to keep going up.
Yep. Yeah. I know for us, we bought, 2005, we bought in 2006, we bought in 2000. When else did we buy? Yeah, we bought so many.
You also know you need to hold when you need to hold.
Yeah. I mean, we bought one and we flipped a house, and we flipped 2 properties, and one of them I was kind of glad we flipped it. The other one, I wish we would have just kept it.
Yeah.
I think for us, the biggest regret we have in real estate is the properties we didn't buy.
100%.
We don't have real estate regrets with the properties that we did buy, even when we bought them in the height of the market. We had 2 properties that we bought that closed, in the height of the market. If you could say today, we could not sell them for the same price we bought them for, but I'm not concerned because I know that, they'll catch back up to that position in fairly short order. And I know
as long as
that
you're earning an income too from them, right? Like you're earning.
Well, that's exactly, and I'm not living them. We're just
Yeah.
parking money, right? So
Yep.
if I look at that and I think if I put it in, say, Tesla stock, sometimes takes a beating, and you think, oh, well, that's maybe I won't never buy Tesla stock again. Well, or maybe it just went through a beating. It's kind of like your relationship, right?
Yeah.
Your relationship with your spouse is going to be sometimes really, really good.
Yeah.
And then sometimes it's going to go through a really rough time.
7-year itch, and it's just you gotta
exactly. And then you got to figure out, hey, does this mean that this relationship isn't good, or does this just means that I need to try to figure out how to
work a little bit harder, right?
Exactly.
Got to put the work in.
You got it.
I had a thought the other day. I was getting really, sometimes the conversations about interest rates can really get to you, and as a professional, you try to guide people appropriately. You try to let them know it's okay. Yeah. And I just sat there and I thought, people are willing to spend, $2,750, $3,200, $3,500 in rent. In rent. They have no idea what their landlord's interest rate is because they don't need to know. They're just making the payment, and they're okay doing that. If you could own a home and still make that payment that you're okay doing, yes, you're going to pay interest. But, you're going to own a home. It's just...
the other thing is instead of even saying owning a home, you're going to have an asset. Right? And that's the hardest thing. A lot of people look at it as a home as a physical place that you occupy. Yeah. But it is an asset that you're putting wealth into to store it, right? And so a great opportunity for a lot of people, especially if you live in Toronto and you're still trying to buy in Toronto, and Toronto is, it's certainly not the cheapest real estate in the world.
No.
And so you might say, okay, well, maybe I don't have enough down payment, or maybe I don't make enough to qualify. Then buy somewhere else and just get some storage of wealth in real estate, so that you can buy a property. I mean, we've done this with so many people where they live in Toronto, they'll buy in, say, Kitchener, they'll buy in Barrie, or they'll buy in London, Windsor, wherever else they'll buy. And then they have those properties rented out.
Yeah.
And that property's looking at, as long as it's cash flow positive,
yep.
And you can still get cash flow positive, properties today. I mean, you look at any real estate that you could buy right now. If you buy a property right now with, say, a mortgage of, say you buy something, I think, in Sarnia, I've seen houses in Sarnia around the value of...
you could buy five for one compared to...
5 for 1, yeah, exactly. But if you bought a house in Sarnia...
Off of it. So why do you care that it's in Sarnia, right?
That's exactly it. Because it's like when you buy a stock, do you care where their head office is located?
Not
you might, maybe.
Well,
maybe you have...
Yeah, if you're really into it, but yeah.
Yeah. But you care what's my return.
Too is the I don't want to say pickiness because love clients, love consumers, love everybody, but the rate shopping is good. I think you should always shop, but sometimes the hesitation still about going forward with the purchase because they don't want to take on a mortgage or they don't want to pay the interest. And I think to myself, if you've ever been in a situation where you can't get lent money, or say you got bad credit, or just something, you're too fresh a credit, if you have a bank willing to give you hundreds of thousands of dollars of insured money for a rate of, let's say, 5.5% to 6%, to buy a house, why aren't you running with your bags of cash to go buy that house? Like,
why does that faceless, nameless organization believe in you more than you believe in yourself?
That is a big move for someone to loan you that money. Like, you should say yes and run and buy something with it and start investing with it. Like, it is very hard to get money lent at that interest rate. Like, you go to the Ford dealership, nothing against Ford, but you get your big F-150, rates maybe 8.99% interest over, 5 years, 7 years. You don't care about that. You're around driving, looking cool, like, what's your return on that?
Yeah, that's right. Well, and that to me is, I think that is probably one of the biggest concerns, I think, with the, people and way they spend their money is trying to figure out in everything you do. This is, I think, something that is just a life lesson. In everything you do, are you spending or are you investing? Yeah. And are you consuming or are you creating? And if you could measure your life by those and say, okay, if, when I'm on the Instagram, right? Am I creating or am I consuming? On the Instagram. That's how you sound old, right?
When I'm on the Instagram.
The Instagram. And then, or when I'm at the store, am I investing or am I consuming? Right?
Yeah.
And so that consuming element, and there's nothing wrong with consuming, but you have to know what is your ratio of where you're sitting.
Yep.
And if you can operate within those bands of being responsible in the way that you spend your money, and you're putting most of your money away into savings and investment, when you buy a house, and even if your mortgage payment right now is say your interest rates are say 6%, and your mortgage is say $500,000 or something like that, your payment's going to be $3,200 a month, which you're going to go gulp. That might be a big hit. But the thing is, 700 of that is just going to pay down the mortgage. So it's really only costing you $2,400. So it's really, if you look at the $700, the $700 component of that payment is forced savings.
Yeah.
And then even if real estate never goes up, that forced savings means that at some point you can reclaim that back.
Yeah.
Now, if real estate starts to tick up in value, now you're getting a multiplier effect on that. So that's the thing that I think people need to do when they're looking at real estate is really take apart what is the true cost of my non-recoverable amount, which is my interest or my property taxes, the things that I have to have that are outside of paying it down, and getting ahead. And that includes maintenance expenses. Yeah. Like you've got to look and say, what over the next 5 years, what is it going to cost to maintain this property? If it's going to and factor that into your cost, because if you do that, now you have a holistic value of what it is versus rent.
Mm-hmm. Well, I think too, like I even had an old friend who's been in the banking industry for a while, and he said, I'm going to tell you one thing. He goes, you're still young. I'm going to tell you one thing. He's like, invest in real estate. I am kicking myself that I did not invest in real estate more. He goes, I put all my savings, all my extra earnings into RESPs, RRSPs, stocks, bonds. He said the whole thing. I had a whole huge investment portfolio. He goes, but I didn't own any real estate. And he goes, I am watching other friends in the industry and I'm looking at their portfolio and they started the same time I did. And he's like, I am kicking myself. Yeah. So he's like, any word of advice, invest in real estate. Doesn't matter when, just do it.
Yeah, I think the term is, and I think you make a really good distinction there, is don't buy real estate, invest in real estate. And I think that's
a house.
Yeah.
You can have an RESP, don't get me wrong, but buy him each a house in Sarnia. 300,000. Buy them each one. Yeah. Because it's not going to stay at 300,000. There's no way.
Well, but the thing is, again, when we talk about that, it not staying at 300,000, we have to, again, put in the mindset of money is not a stable investment measurement because it has transitory value. Like it's going to shift up in value, shift down in value. I mean, when the government goes out and prints off trillions of dollars, what does that do to the value of that dollar? Well, of course, it's going to drop the value of the dollar. Yeah. So the house isn't really going up in value. What's happening is the dollar is going down in value.
Yes.
So if you actually look at that, that's why housing is a good hedge, because housing says, well, we're going to keep stable as a value. while the currency goes down in value. Because governments love printing money.
They love printing money.
Well, Janine, it's been an absolute pleasure chatting with you. We really, truly appreciate your insight. And what's the best way for people to reach you so that they can get things going and get some really good sage advice around real estate and mortgages?
Well, you can reach me on the Real Approve webpage, or you can reach me on Instagram, Facebook. I'm not on the Twitter. Need to get on there. LinkedIn, or just simply by calling me. Beautiful.
Well, Janine, thank you so much. And guys, we really appreciate you listening and hope you got some value about learning about, number one, getting into the mortgage business and how it can really, truly make an impact in somebody's life, both yours and the people around you, and some insight about the Canadian real estate market and that there is buying opportunities out there today. It is a buyer's market. So get out there and start shopping and start winning and start building up your real estate portfolio and building up your true wealth. So we'll catch you guys on the next one.